What is stagflation, and should the US prepare for it? There's no doubt that Russia's invasion of Ukraine will raise inflation, giving the region's production of energy and food commodities, as well as the reaction of countries and businesses around the world. What is less clear is whether the current period of worsening inflation will lead to stagflation. But what exactly is stagflation and what does it mean for our economy? All that and more in today's video. What is stagflation? Stagflation, also known as recession inflation, is an economic phenomenon characterized by a country's economy experiencing persistent high inflation, high unemployment, and stagnant demand. Where did the term stagflation come from? Rising inflation and slumping employment stifled economic growth in the United Kingdom and 7 other major market economies, including the United States, during a particularly difficult period of economic conditions in the 1970s. And equity market investors suffered greatly as a result. Following the use of the term stagflation by Ian MacLeod, a British Conservative Party politician, during a speech to Parliament in 1967, it was adopted by the media, which began using it when referring to the country's economic conditions from 1973 to 1982. Stagflation is a combination of the words stagnation and inflation. Since then, economists have investigated the causes of stagflation and devised methods for measuring it. Their findings also include practical advice for investors on how to protect their assets during periods of stagflation. How do we measure stagflation? Stagflation is not measured by a single data point, but by analyzing the direction of several indicators over time. 2 of these data points are increasing prices and rising unemployment. The path of a single one of these indicators does not always indicate the presence or absence of stagflation. Rather, the concepts are viewed as a whole. What causes stagflation? Keynesian, monetarist, and supply-side economists all have theories about why stagflation occurs. Keynesians believe that supply shocks are to blame for stagflation. For example, they point to rising energy or food prices as the root cause of stagflationary economic problems. On the other hand, monetarist economists blame excessive money supply growth for creating a situation in which there are too many dollars chasing too few goods. High taxes, excessive business regulation, and a persuasive welfare state that allows people to live without working are all blamed by supply-side economists. There are other theories that stagflation is simply a natural part of the business cycle in modern economies, or that stagflation is caused by politics or social structures. The inability to forecast, avoid, and contain stagflation once it has occurred suggests that the precise forces that cause stagflation are unknown. It is also unknown how to deal with stagflation once it has occurred. Despite the government's best efforts, stagflation persisted in the United States during the 1970s. The trend was finally broken when the Federal Reserve raised interest rates to the point where many segments of the economy were unable to borrow, and the country entered a deep recession. Why is stagflation disturbing? Stagflation is a circular argument because slow economic growth would almost certainly increase unemployment but should not result in price increases. This is why this phenomenon is regarded negatively. An increase in employment leads to a decrease in consumer spending power. When you factor in runaway inflation, what money consumers do has lost value over time. There is less money to spend and the value of money is declining. But before we continue, go ahead and click the subscribe and like buttons. It takes a lot to make these videos. Your small actions tell YouTube to keep promoting our videos. Also tell us in the comment section what you think is the best way to survive stagflation. Thanks. Now back to the video. Is stagflation coming? While international authorities work to contain the 2020 pandemic, small company owners and unemployed Americans are straining to pay expenses. Taxes will need to be raised to fund unstoppable public programs. Since the shutdown began, approximately 20 million jobless claims have been filed in the US alone. Foreign markets and cryptocurrencies are also suffering, and prices are rising. Should we be worried? So the big question now is, are we supposed to feel worried about what's happening? As of the moment, GDP is falling, and the details actually provide reasons to be optimistic, and that should bring out all the stagflation skeptics. The US economy shrank by 1.4% year-on-year in the first quarter, falling short of expectation for a 1% increase. However, we shouldn't get too carried away because the details aren't as bad as the headline figure implies. Domestic demand actually held up quite well, especially given the blow to economic momentum caused by the Omicron wave late last year. In fact, consumer spending increased by 2.7%, while non-residential investment increased by 9.2% and residential investment increased by 2.1%. The negative GDP figure is due to a drop in exports due to weak foreign demand due to COVID restrictions and an increase in imports, which results in net trade subtracting 3.2 percentage points from headline GDP growth. Inventories were depleted as a result of ongoing supply chain disruptions, subtracting another 0.8%, while government spending fell for the third quarter in a row, subtracting 0.5 percentage points. Second quarter growth should pick up. Looking ahead to the second quarter, experts are confident that growth will be higher despite fiscal and monetary policy becoming less supportive. While inflation is eroding purchasing power, nominal incomes are rising rapidly and employment is increasing, all of which keeps spending firm. Also, there is the legacy of increased savings as a result of the pandemic, as well as large wealth gains as a result of rising asset values, which can be used to keep consumer spending growing nicely. Residential construction remains strong with rising housing starts and building permits, while robust durable goods orders point to a favorable corporate investment environment. We also expect net trade to be less of a drag, though it will remain a drag given strong domestic demand relative to elsewhere, and companies will continue to seek to rebuild inventory levels. How to build your financial stability in case of stagflation. Just because experts say that it's very unlikely to happen doesn't mean that we shouldn't prepare ourselves in case the tables have turned. During the 1970s stagflation, Wall Street investors learned the hard way that they couldn't keep up with inflation by relying solely on US stocks. The unemployment rate in the United States was dragging down productivity. Stocks were extremely volatile. While inflation continued to rise in a straight line, investing in the government is risky when the dollar is weak. That leaves 3 sound investments to think about. 1. Look for stronger bonds and cryptocurrency. The fundamental problem with stagflation is that you have fewer dollars, and those you do have don't go as far. When the value of the dollar falls, it's time to start thinking outside the box to see the bigger picture. It is critical to compare the dollar to stronger investments to outperform the dollar in the market. Basically, if the dollar is weakening, invest in whatever it is weaker than. Number 2. Invest in hot commodities. Not every investment must be in companies' security. Commodities such as precious metals, industrial metals, and other industrial and agricultural goods can help you get through a period of stagflation. Commodity exposure is much easier to obtain today than it was in the 1970s, and the crypto industry includes currencies, securities, and commodities. Number 3. Identify high-performance stocks. Companies are affected in the same way that each country is. The global coronavirus lockdown has resulted in mass layoffs in industries such as retail, media, and healthcare. Meanwhile, tech companies such as Microsoft, Amazon, Facebook, Apple, Google, and Netflix have seen their stock prices skyrocket. To survive stagflation, it's necessary to conduct due diligence and invest ahead of the market. Consider it extreme couponing for securities. With all of this talk about stagflation, it may come across as fear-mongering. So let's compare stagflation to recession.